Hi everyone, JJ here. Welcome to another live session. Today I'm going to be looking at Pinterest. They've just come out with earnings. The stock is sinking so far, as you can see on screen. We'll just have a quick look at that, and then we'll get into the earnings, what people are saying about it, and we'll have a look at the investor deck too. We'll go straight to the source, not just rely on what media is saying. So let's get into it. Also, full disclosure, I'm not a Pins shareholder at this point. I'm just an interested party having a look at the stock. I like stock analysis, so I like to have a look at a lot of stocks, a lot of companies. So it's going to be interesting for me to take a look at Pins. If you're a shareholder, then you'll probably know more than I do, but let's get into it. Let's see what they're saying. Well, let's see what the stock's doing first. You can see that I'll just refresh this, see what we're doing here. See what's going on here. So it's down 8.82 as I speak at the moment. It was down, it plunged way down there, more than 20%, I think. It was a bit of a shock, I think, the shareholders. So what's going on here? What's the reason for the drop? That's what I want to get into today. Let's get to the bottom of this. Let's see what's going on. And so, but I just want to see let's say over this year to date, we're up 12.46%. The stock's up. So it's had a pretty good year so far. Not as good as some, but still, that's pretty good. And then 64.66% over a year. So it's been doing well over the last year or so. Like many tech stocks have, they've rebounded. If we go back, 5 years, we can see it's up. Oh, it's up similar amount over 5 years. We can see that big spike there that happened during the emerging tech bubble, we could say. I think it was a bubble. It was definitely a bubble. And let's just see down from that peak of that, it's down 52%. So it's down substantially, but really rebounded. Let's see if I can find the low here, maybe, mid 2022, something like that. And so it's up 124%, bounced 124%. But what's the reason for what's happening today after earnings? Now, I want to go immediately to the news. I'll just share that with you. And we can see there, this is a news article from CNBC, of course. And we'll just read through that in a sec. I'm just going to check that we're all working here, that everything's going. I'm live on YouTube. Hello to everybody there. I'm just going to check that I can hear myself. Live on YouTube. Yep, hello to everybody. Good, it's working there. So let's get on with it. So now let's read through this article a little bit, see, and then we'll go straight to the source. But this is CNBC that's just come out. What's their take on it? It says Pinterest shares plunge on weak revenue and forecast. So is that what's going on? Weak revenue and forecast. And this was not long ago. The key points of this is Pinterest missed on sales but beat on earnings in its fourth quarter earnings report. So missed on sales and beat on earnings. Pinterest report follows earnings from Meta, Alphabet, Amazon, which all show double-digit growth in their ad business. Snap, however, isn't seeing the level of expansion. So comparing to those other companies that had good earnings, so maybe not so good from Pinterest, we'll see. Pinterest shares plummeted and extended trading on Thursday after the company issued a weaker than expected forecast and missed on revenue. Revenue of $981 million versus $991 expected. So they missed on revenue there. Not too much. And according to LSEG, formerly known as, okay, we don't need to know that. And earnings 53 cents per share adjusted. Adjusted is a important thing to say. I mean, adjusted for what? That's the problem Charlie Munger said. If you adjusted earnings are BS earnings. So versus 51 cents per share expected. And the revenue rose 12% year on year from 877.2 million. So 12% revenue growth a year earlier. And while net income was $201 million or 29 cents per share, up from 17.49 million a share, it brought in the previous year. Monthly active users in the fourth quarter rose 11%. So Pinterest is getting fairly mature company now. It's been around for a long time. I remember using it. It's got a big it's got a big user base, but rising 11% to 498 million. That's pretty good. Now I did earnings. If you want to go back to another live session, I did a Spotify earnings this week, and they are up to over 600 million monthly active users. So again, Pinterest quite big, not that big, and I know X or Twitter was around, I think, the 400 million active user mark. And so, and topping analyst estimates of 487. So they're still growing in terms of users. And so it depends how they monetize those users, of course, going forward. The company said its global average revenue per user was $2, lower than analyst estimates of $2.05. Pinterest said first quarter revenue will be between 690 million and 705 million. So first quarter next year, this is their guidance, which may be the reason for the fall. Let's see. The middle of that range, 697 million, is below the average analyst estimate of 703. So 697, 703 compared to 703. Not a huge miss there on that guidance from analysts. And analysts, I mean, I don't really listen to analysts. I don't really focus on analyst numbers because really they just go with the flow. They go with kind of momentum. They put price targets up and they put guidance up depending on, many different things really. So I don't look at that. We look at the fundamentals of the company, what they've been doing. The stock initially sank as much as 28%. As we see that in the chart there, it really went down and sort of climbed back up to where it is. But 28% initial plunge, so a bit of a shock to the market. In an after-hours low of 29.4, and it then paired some of its losses, climbing back to 35. Okay, the company's report comes as broader digital advertising markets showing recovery, with Meta, Alphabet, and Amazon all picking up steam and growing their ad business. So definitely being compared to these other companies, these other giants, mega companies in the so-called Magnificent Seven, all picking up steam and growing their ad business by double digits. All right. In the fourth quarter, the data suggests that businesses are boosting spending on online promotion after cutting back. In 2022, 2023, the thought that the recession was coming and ad revenue gets hit kind of first in a recessionary environment, because ad budgets are the first to go, the first to get cut. Really, in my experience, I've worked in advertising, and the advertising industry really feels that when companies cut back, and if there's a possible recession coming or even a slight downturn, budgets get cut. After concerns that the Ukraine-Russian war and high interest rates, but not all online ad companies were seeing the benefits. Snap shares created 35%. So Pinterest and Snap, that would be probably another reason for it, that people were well aware of what happened to Snap and then looking at what was going to happen to Pinterest. After Snap reported fourth quarter sales growth of 5%, trailing expectations, and the company also issued weak guidance. So the guidance will be important here. We're going to look at that. Well, I'll look at their press release and see what they said at the guidance. They leave that till the end. Costs dropped about 10% from a year ago, largely due to a decline in sales and marketing expenses. A year ago, Pinterest slashed about 5% of its workforce, which often, unfortunately, the market likes when companies do that. Part of an industry-wide downsizing. This downsizing, getting ready for the recession that everybody thought was going to happen, hasn't happened. And so let's take a look. So if we go to, this is the Pinterest investor relations site. If you're new to investing or relatively new, every company should have an investor relations part of their website or separate website where they have where they have information for investors. We've got the press release, we've got the presentation, and we've got the earnings call. I'm not going to go through the earnings call today. Just want to keep this relatively short. I went through the Spotify earnings report and Alibaba yesterday. It's been a big week, so this could go on for 2 hours if I was going to do that. But we'll just look at the press release, the presentation, and I'll have a look at some financials from the software that I use. And is Pinterest a buy? Where is it at? What are their financials like? We'll have a quick look at that. As I said, I'm not going to make this too long today, just a short one. And okay, so we have. Sorry, I wasn't sharing that screen. There we are. That's the events and presentation section of the site, and archive going back so investors can look back. Now, if we go to the presentation, the press release for fourth quarter and full year results, that what the company says itself is that Q4 revenue of 981 million, which we saw in that news article, grew 12%. So revenue growth 12%, marking continued double-digit revenue growth. So they're just able to say double digits, just over that 10% to 12, which is not bad. 12% is not bad, but for a growth company, obviously expectations can be a lot more than that. As I said, Pinterest is, getting reasonably mature. It's been around for quite a long time now. I'm not sure the founding date, but I remember using it years ago. Global monthly active users reached an all-time high of 498 million. That's what we saw. I mean, that's substantial. 500 million users is, is it how big can it grow? That'll be, investors will be aware of that too. So they can, if they can get monthly active users, keep them, and then sort of monetize their usage on the site. Pinterest obviously used for buying quite a lot. People putting boards of products and things that they like and hope and possibly buy from there. I'm not hugely familiar with the company, as I said, so I'm not going to go too into that today. But today announced financial results, blah blah blah. Q4 revenue of 12% year over year. Global active monthly users up 11%. So 11% growth in users. That's okay. It's pretty good. 11% double digit. They obviously want to get to try aiming for this double digit. GAAP net income was 201 million for QA. GAAP net loss of 36 million. GAAP loss was 36 million. So yeah, a GAAP loss. Adjusted EBITDA was 365 million and 683 million for Q4 respectively. Okay, adjusted what? Adjusted for what? And is I really don't like to see adjusted. Like it can sort of fudge the numbers. Companies do fudge the numbers, and as Charlie Munger said, adjusted is BS. Earnings. Total cost and expenses were 785 million. Okay, we'll look at the deck and we can see better. So I'm going to go down here. We've seen these. This is in the same information in a table. Net loss margin. Let's get into the investor deck. We can tell more. But I just want to see the guidance here. That's what they say. This could be the reason for a market going down. For Q1 2024, we expect revenue to be in the range of 690 to 705 million, representing a 15 to 17% growth year on year. Okay. We expect Q1 2024 non-GAAP operating expenses to be in the range of 455 million, representing a 9 to 13% growth. Operating expenses are growing and revenue is growing. Please note that the operating expense guidance does not include cost of revenue. Okay. As I said, I don't want to make this too long. Getting on with it. We've been live for about 15 minutes. And so let's have a quick look at the investor deck here. Actually, I'm just going to look at this first. This is from GuruFocus, which is some of the financial software I use. So when I'm looking at companies, it's a way to filter out pretty quickly. Just have a quick look at the numbers to see whether it's worth going into further, diving deep into, because most, the vast majority of companies out there are not worth investing in. And there are, thousands and tens of thousands all around the world. So it's good to look at this. I said I'm not a Pinterest investor, but I like to look at these things. Just quickly off the bat, I just to glance at what the value is. Just we take this with a total grain of salt, because if you have to do your own work yourself. But they're saying it's a GF value of 29.59 and it's currently 40, so they're valuing it under, currently significantly overvalued. And so the market cap is 27 billion. It's going to be a pretty big company, and a enterprise value of 25. So enterprise value less than the market cap. We can see here that the debt to equity is 0.06, which is a low number. And if we go over here, gross margins of 76 point. This is just for 1 year. The last 12 months would be 70 gross margin of 76, operating margin of minus. So these are negative numbers. Return on capital employed, which I like to look at as negative. So really, not super numbers, but it's a growth company, still, not really profitable. And we can see here that the PS ratio, price to sales, is 9, which is pretty high. This site is a value focus site, so red means bad. And price to sales is pretty high. So EV to EBIT is negative. These are all negative numbers, obviously. And we look at quick look at the financials over time. We can see revenue growth 5 years is 32%, 1 year 5. This is before the new numbers won't be on here yet. So this is just looking back over time. See return on equity. 2021 was the only positive year so far. Annuals. Yep. So we just look at the annuals. None of those are positive numbers except for 2021, which was unusual year. Return on invested capital, 40 in that year, but negative. And so gross margins, obviously investors would like to see high gross margins for these kind of companies. If we're going to compare this to Meta, Facebook, part of Meta, I mean, these are not great numbers compared to a company like that. And they're pretty good for Meta all the way along. You should keep that in mind. If we're going to compare it to, say, Meta, their numbers have been, if you were to look at these numbers on Meta, they're kind of very good all the way through. So we keep that in mind. Operating margin negative, and it was at 12 in that 2021 year. So as I said, I don't know a lot about the company. This is just a superficial look for me. So bear with me if I get things wrong. I'm just, I haven't looked at this company before, really. I haven't really been that interested. And this does not make me super interested in it, really. Looking at these numbers. So revenue, we can see revenue consistently going up since 2017. Consistently up. Pretty good percentage revenue increase. Gross profit. Gross margins are high. But, operating margin negative. So from that point of view, not great. Cash and cash equivalents. Let's see what they got there. They've had like over $1 million in cash and cash equivalents. And, $1 million, over $1 billion in cash, 1.1 billion they have in cash. All right, so that's the situation there. I'm not going to dwell too much on that. I don't like really. Actually, we'll just look at that graph there. So this is a graph of revenue. Revenue trend is up. Free cash flow, and so forth. Can you see that? Yes, you can see that. Good. So I don't super like what I see there. Just diving into that, it's not something that I'd be super interested in, to be honest. But I do, as I said, I like to look at a lot of companies. Momentum rank, 6 out of 10. So, momentum. Growth rank, 8 out of 10. 3-year revenue growth rate, 15.7. This is not including the most recent numbers, of course. And so that's sort of positive growth rank there. Growth company, of course. but is it growing fast enough for growth people to be invested in it? Is the question. So let's look at the deck. As I said, I'm going to go through this, and that'll be it for the. So because we're already 20, so I'm not going to make this any longer than half an hour. Keep an eye on that. So revenue, we can see the graphs. Always good to see. Oh, okay, hold on. I'll share that with you. Sorry about that. I keep forgetting to share the screen. So revenue up 12% year on year. US and Canada, so they're breaking it down here, up 8%. So they break it down by US and Canada, Europe, rest of world, and year on year growth rate. So if we look there, US and Canada is the biggest there, followed by Europe. It's interesting, but far and away US and Canada is their biggest market. So let's have a look. Global's 12% growth. US and Canada 8%. So that's their biggest market, not growing so much. Europe's the biggest growth at 32%. So they're obviously trying to grow in the Europe sector and rest of world. Maybe it's tapped out pretty much in the US. 8% growth, not double digits. Investors won't be liking to see that. Active users again broken down by region. So US and Canada is global, or US and Canada's 2% monthly active user growth. So yeah, really kind of tapping out in the US and Canada, maybe saturating there. And global's 11% growth and 15% growth from rest of world. So, I'm comparing this to Spotify, even though it's a different company. The growth in users definitely stronger in a company like that. So investors won't like to be seeing this, I don't think. Average revenue per user, here we are. So globally it's up 2%, US and Canada's up 6%, so, and 23% up. So yeah, they're obviously trying to build things in Europe. They're 23% average revenue per user up. And so expenses, want to see expenses going down, and they are. So that's good. Adjusted. I don't like to look at this too much. We look at this fine print here. I'm not going to go into that. All right, so that's the quarterly number. We've kind of seen the numbers, so we don't need to go through that. So interesting. I find that interesting, but honestly not super compelling is my summary of this. It's not something that I really want to dive more into, as I said, because there's so many thousands of companies out there. This is probably not compelling enough to spend more than half an hour on and dig into it like this. If I saw things getting more positive towards more profitability and growing faster and return on capital, it's, as I said, you compare it to in terms of these social media companies, we can compare it to Meta, we can compare it to Twitter when that was public, which wasn't super great. It never really reached its potential. And compared to Meta is sort of a monopoly, or big market share in the space, and came out with really strong numbers. This is kind of a different thing, but we do have to take into account Meta's dominance in the space, I think. And of course we have YouTube, which is different again, Google. So it's a certain kind of thing. But are they growing fast enough? Are their financials good enough to dig into? And the market cap's not exactly small. I'm more interested in small caps. So if we're going to think how big is this going to get, and the revenue per user, it's sort of not compelling enough. I'm more interested in Spotify from that point of view, because they're going for 1 billion users. No, they haven't been super profitable, but they have shown profitability, and they're just reinvesting for growth, similar to kind of what Amazon did. And so this is why it's not super compelling for me to go further into this. So sorry if you're a shareholder to hear that, but if you disagree with me, let me know. Let me know in the comments. Most of people will see this as a replay, so let me know in the comments what you think. Are you a Pinterest shareholder? What do you think of the company? Am I wrong to not dive more deeply into this? And I'm looking at been looking at other companies. My Patreon members, the Art of Value Patreon, will get more than what I have on YouTube and Spotify and the other public videos, and I go more into depth into the stocks that I do actually own, that I'm researching. So I'm not going to dive more deeper into this one, obviously, but I have dived deeper into different sectors. And the reason that I'm into smaller caps is some people say they're more risky, but not if you do the work on them, I don't think. And there's more runway for growth than a company like this, which when it came public was probably quite a large market cap already. The valuation, they kind of wait longer these days, but there are smaller companies out there between 1 and 2 billion that have a runway for growth that could be 10x or more. Those are the kind of things that I'm interested in. So a company like this with a market cap of what did we say it was? It was a market cap of 27 billion. So to grow 10 times, we're going to have to get to a really substantial number of strong growth, and I'm not seeing this here. Can they make their financials grow the market cap from that point of view? It's 27 billion. Could it get to 300 billion? I'm not seeing it, but maybe you have a different view on that over time, and the just financials aren't good enough to justify it in another way, even if it has not much growth. So let me know what you think, and thanks for watching and listening this time, and I will see you in the next one. Thanks for joining me today, and for those of you who are watching later, I hope you enjoyed this. I'll be doing more analysis on different companies. This is just decided to do this like an hour ago, and so might do this on a more regular basis so I can do them quickly. It's obviously earnings season, so earnings came out and I thought, well, I'll jump on this and have a quick look at it, see what the earnings were. All right, so thanks for joining me, and I'll see you in the next one. End session. See you later.